Don't go chasing waterfalls. Holy moly, what a wild week in the markets. You're watching the Stock Market Brief Show. We are going to be doing a weekly recap, giving you some insight into what it is that I'm seeing from a technical and intermarket perspective. All kinds of things are going to be taking place next week. We have big earnings from these mega cap companies. We have Apple reporting next week, Microsoft reporting next week. We have Tesla reporting next week as well. And on top of that, we have a couple other ones, but those are those monsters that we want to pay attention to. Also to note, we have the FOMC meeting. Needless to say, there's going to be a lot of volatility. The option market is already saying that there's going to be a lot of volatility in this week. So let's go ahead and talk about it. Alrighty, everybody, welcome back to the show. We are looking at how the 11 sectors in the S&P 500, how they kind of just finished for the week. Everything in the red, as you probably already know. It was a wild and wacky week. And hopefully you've been prepared for this volatility. We've been talking about it for quite some time, how there's been this rotation into defensive names. So the top performing sectors for the week was XLU, XLP, and XLRE. And then we have energy slightly down there beneath us. It's down 3% on the week, but it's up pretty good on the year still at this particular point in time. It's actually one of the only S&P 5 sectors that are up on the year. As you can see, it's up 12.52%. It's made an incredible run. Is it time for it to sink off? It's a possibility that needs a little bit of room to breathe, but we'll see. You also notice this. Financials was one of the top performing sectors. It was up over 5%, and in just a couple of days' time, it's down 2% year to date. That just goes to show you what volatility can do and just how fast a move can go up, how fast it can go back down to the downside, okay? Up 5%, it was one of the top performing sectors. It was in number 2 place, and very quickly, consumer staples kind of bumped into the lead there year to date. Now, if we take a look at the year to date heat map, what you'll notice here is, besides just all the red, it's these tech names that have been really a drag on the overall market because of these cap-weighted indices. So Microsoft is down around 12%, Apple's down around 9%, Google 10%, Amazon 14%, Tesla, even Home Depot got hit hard. You can see this one bright red, Netflix, and don't forget about Nvidia. It's also a very big one to watch too as well, down 20% year to date. So there's been some crazy price action, insane sell-offs taking place. Volatility, like I said, is still here, so we still need to be very careful. We'll look at the charts here momentarily. I'm going to start off with the rotation graph and then get into some indicators. Then we'll look at what the options market's pricing in and kind of my thoughts going into next week with all these kind of news events that have been that have been building up going into this following week. So if we look at the relative rotation graph, what do we got going on? Well, clear as day. You can see XLP, strong, thick tail there, moving into that leading quadrant. And, just the other week, it was in the improving section. XLRE has been pointing up to the top right, going to the leading quadrant. And then utilities also too as well. Healthcare is moving from that improving, from the lagging quadrant into the improving quadrant a little bit more slowly as well. And then you can see energy is still fairly strong from a 4-week tail length perspective, but we can see some of these other names creeping up. So what does this mean? It just means that we saw this in the improving quadrant and we saw the tails heading into the leading quadrant. It gave us a heads up that there was some rotation into defensive names, and we're starting to see that now proliferate because we see the indices starting to sell off more. Let's hop into some indicators really quickly. I got quite a few to go over, and then we'll get into the indices. So first and foremost, I've been showing this chart a lot. It got another low point, okay? So 16.84. So over 80% of the stocks, right, are below that 200-day moving average. And we're talking about the Nasdaq composite, which is, roughly 3,300 stocks, give or take, okay? That we've been talking about just how dangerous of an environment this actually is. It's the termites. They're eating away at the house. So they're just eating away at the foundation to the point where eventually it's going to catch either to the downside or the upside. Okay, and we saw this, we call this a stealth bear market, and perhaps we see a stealth bull market. That's still potentially in the cards. But as it stands right now, with the indices still not too far off the all-time highs as we're moving into correction territory, and volatility is expanding greatly. This is not the time to start really, levering up and being all willy-nilly out here in the markets. It's a time to be much more defensive and then keying in either tactically intraday or being a little bit more strategic with defensive positioning. So that's one chart that I wanted to show you. Another one here is the new lows have been building tremendously throughout this area. In just this last trading day, we saw a pretty darn large spike. So when we're looking at the Nasdaq composite, we got a reading of 1315, so 1,300 stocks made new lows. So that's a large percentage of the Nasdaq composite. All those stocks made new 52-week lows. That is, pretty incredible move to the downside. Now, these type of moves, you do get counter trend bounces, but there's something important to call out here. Okay, you got to think, if this is here, this is the NDX, this is the Nasdaq 100, okay? If you have large institutions, and that right there is distribution, hedge funds, institutions, whatever the case, liquidating positions up in here, creating all this distribution, and then we just finally started breaking down through new levels, you have to wonder, if they took all that time to get out of positions, are they going to, after just a small drop, all of a sudden get back into those positions? Like, think about that. I don't know the answer. But, when it comes to this, when we're moving into this decline phase potentially, and we're breaking down these key levels, and volatility has been increasing, it seems like it's distribution, what is big money going to do? Well, we're starting to see what it seemed like was they're rotating out of these, bloated stocks that have been doing so well in an easy monetary environment, and they're going into more safety or rotations. And that's going to kind of set us up for, like, if everything's selling off, where do you go, right? You can't necessarily just jump into cash. You can't just, these big institutions, they just can't move everything into cash overnight. It's, it takes time. So what you can see is counter trend bounces on lower volume, bring in more people to sell off further. But also you got to start looking at things like the note market or the bond market, for example, TLT, which we'll get into here a little bit later, where you could potentially see some pretty significant pops there. If this selling continues, that is. So here's the summation index matched with the 9-month. I'll zoom in on the 9-month here momentarily, but you can see here, we talked about when it was curling over, got back down below zero. We said when it's down below zero and this gets a minus 300 reading, we've seen boom, boom, and boom, sell-offs take place. Now, 293, it's not quite 300, okay? But it's not too far off. Just like we said right here, hey, it was like 297 or something. I was like, it's not quite 300. And so, it still is important to look at that, but it's also an overextended level, right? So what did we see down in that time frame? Well, we saw a bounce take place. Okay, so a little bit of a recovery. So it's very possible still that we still potentially get a bounce. But just note that with this turning down and it's below zero, this is heading down, it's almost minus 300 reading. That's led into some pretty interesting times in the market, leading to why I'm just saying, and have been saying, you need to be very cautious. All right, if we zoom in on the 9-month, like I was saying, this low reading right here wasn't quite minus 300. But if you take a look at the New York Stock Exchange, that marked the bottom, boom, came in, and then we rallied higher. So right here, it could very well be an area for a bounce. But like I stated, there is volatility being priced in. We have some big, earnings coming out. I don't know necessarily how much weight it's going to have on the New York Stock Exchange, but I know that it'll have weight on like the Nasdaq 100, the Qs, and the S&P 500, or even, not even the IWM, because IWM is obviously different. Now let's take a look at CPC. Here's another interesting thing. The 10-period moving average is still zooming up, and you can see the put to call ratio is rising here. That happens during times of market panic, boom, and you can see the purple line heading up. So if this continues to head up, that can still give us a warning to potentially more sell-off to come. Now, what I want to pay attention to is when this 10-period moving averages turns back around and crosses back through 0.95, because that is actually the buy signal. We talked about the sell signals, right? These red, it's basically when this 10-period moving average goes from bottom and crosses through. It's, sell off, sell off, sell off. And it's been pretty accurate. Actually, this one right here, we gave the signal as a sell-off, but this 10-period moving average, it didn't actually quite cross under it. There was some weird readings the day prior that led me to believe that, hey, this is going to be triggered. And so we called it a sell signal, but it actually, if you zoom in on this, it wasn't necessarily triggered. So, It's not always perfect, like nothing in this kind of space is perfect, but you need to just be kind of aware that it still could present itself some sort of risk. Okay, if we take a look at a couple of the BP charts, I like to look at these for overextended territories that could potentially lead to bounces. And we have lower lows on the BP bullish percent index, and we have a positive divergence here. Those, like I said, they typically lead to bounces. They can also lead to more aggressive sell-offs, but for right now, we've had already an extended move down on the Nasdaq and the Nasdaq composite. So I'm just looking for the possibility for things to start either playing like an aggressive bounce and then looking to reposition potentially for shorts in the near future if we keep kind of making lower highs. BP SPX charts moving into oversold territory right here too. Not quite a positive divergence. I would like to see this line come down, boom, and then have this obviously slope up, but you can tell it is moving into that oversold territory. If you look at BP NDX, positive divergence right there too as well. Very similar to the BP, not the BP ND, the BP COMPQ, the one that we just went over right here. A couple other indicators, the NIMO and the NAMO will go over. These are McClellan oscillators. It is in that overextended territory. Boom, boom. Each of those times we saw bounces come from those areas. Keep in mind, we've gotten down there before, and it's also continued sell-off. So we'll see here if we do get some sort of a bounce or some sort of rally. What I would say pay attention to is what the Fed is going to say. The Fed has been somewhat aggressively more hawkish as far as rates and lifting rates and tapering. I think the market is giving the signal saying that they do not want that, and you better just take it, ease off a little bit. So if all of a sudden they ease up on that hawkish type tone and they start becoming more dovish, I would expect to see potential rally kind of come from that. But like I said, they're in a very hard place as they're trying to fight this inflation. So if they continue down the path of this hawkishness behavior and they still are kind of sticking to the plan, which it seems like they kind of have to, it's going to be continued just increases of volatility. That's what we're going to see. NAMO, same thing. It's getting pretty darn overextended. Last time we got a reading like this was right here. If you look right up, that was where we got also a bounce there too. Okay, let's continue on to the trend indicator. The trend indicator gives us a good buy and sell signal for a shorter term. When it gets to this red area, we've seen sell-offs, right? Boom, boom. And then right here, you can see I highlighted those ones in red where we saw a little bit of a sell-off. It's not a perfect signal by any means here too either, but it gives us just a little bit of heads up. So the reason why I'm showing you this is because it is pointing up, heading towards that green line, which is right around 1.5. This is not just the trend. It's a 10-period moving average over the trend on the 60-minute time frame. Now, when it gets to the green line, when it crosses to the green line, those times, it's marked little, rally areas where we saw some strength come into the markets right there. So you can see it's somewhat good for identifying either potential short-term tops or short-term bottoms. So that is what I'll be paying attention to. This continues to move up, and I'm sure that I'll be posting that either on Twitter or just bringing it up on the video. Let's hop into the S&P 500 and look at some of the indices. So this is one of the charts that I showed from a longer-term perspective, and just to give you kind of an idea, of what's going on here. I don't know why I have that indicator on this chart. I forgot to remove that. That's the chandelier exits. Sometimes I like to just apply that for longer term. Are we getting below it? Are we not? And we did actually cross below it. And we haven't crossed below it since really getting off the pandemic low right over there. Could signify something, might not. But when we gotten down below there before, now I'm kind of going off a tangent. We just kind of went sideways for a little while. This one we didn't. Just went sideways and then we started rallying up. But really, I'm showing you this chart because every time we get into this upper trend line right here, dating back, 10 years on this chart, we've not necessarily sold off, but we also, when you pair it with this indicator here, you can see that when we had these negative divergences, it went through prolonged periods of kind of just chop, chop, chop. And then now we're right here at the upper edge, RSI divergence. This has been dying off, giving us a heads up notice for quite some time. And now, are we going to enter a period where we're going to get a significant drawdown? Or is 2022 going to be the year of like what IWM did for us last year, where it's just a bunch of chop? And we don't have that answer necessarily at this particular point in time. We're coming off, a market that just made a vertical move to the upside. So to think that we can't go sideways for a year, I mean, Why would you think that? Like, it's more than possible. I don't expect 2022 to be some 30% gaining type of year, unless if we do get some just crazy sort of blow off, melt off top. But, midterm election year, it's typically weak up until October. I don't have the seasonality chart in front of me right now, but it's typically weak until around that time. So we got to just play this once again tactically and just see how things roll out. So why am I showing you this chart again? Once again, look at that candle. So on the weekly time frame, we're down 5.75% on the week on the SPY. That is one of the worst performing weeks we've seen in a very long time here. And if you just look at this chart, this is a log chart. All right. And if you can see this candle dating back this far, I mean, clearly, like that's a pretty aggressive type candle, signaling that this could be potentially the start of a stronger, not necessarily a stronger move, but the start of a change in the tone of the markets heading into 2022. Clearly, there's a lot of volatility. This is not something that you want to just try to catch, and then maybe rally right back up. Personally, when we get into bear markets, note this. Bear markets, you will see the largest rallies in bear markets because the largest rallies in bear markets suck more people in before the smart money dumps it. So if we start seeing a very fast recovery, be wary of that. And how we can be wary of that is by paying attention to the volume. If we're getting huge rallies, but the volume is minimal, be careful. We've been talking about that and we saw, what happened. Now let's zoom in on the weekly time frame. We closed below that 40-week moving average. We closed below that 30-week moving average. They're still sloping up overall. Okay, so we're technically still in an uptrend, but that break right here, that was aggressive. That's not something that you want to just overlook and say I'll be fine. We don't have the signal that we'll be fine as of right now. Okay, so be mindful. Yes, we can bounce easily right back up. But just be very, very careful and very, very aware that right there is a large red candle to the downside on some stronger volume. And we've been selling off on stronger volume here, okay? Let's see what the options market is pricing in for next week. That is a huge range of volatility. It's bigger than the prior week, okay? So the low end is 427.50. The high end is right around 450. So how do you potentially look at this? Well, first off, if the options market is pricing this as kind of the risk zone, the RZ, the risk zone, how I would look at this after a big sell-off like this, I would look for the bounce up on low volume, and I would actually be looking to potentially short into that. And then from that point, I would just have a tight risk to reward, right? So if it keeps on going up and, then I'll get out of the position. But notice, as you can see, if it comes all the way back up, which is a pretty strong move to the upside, and it's more than possible, it would land with this area of resistance and this previous area of support now can be resistance, and then this previous area of resistance obviously was that support. So to see this right here, that 450 level, acts as resistance, I wouldn't be surprised. I wouldn't be shocked. It would actually make, like I said, for a good potential shorting opportunity if we can reach up to that level, okay? Now, if all of a sudden we rally up and close up here on the week, that changes the tone of this sell-off a little, okay? So that is one thing to pay attention to. You got to understand, a lot of people look at this 200-day moving average, which we closed below, as an area to potentially accumulate. Okay, so if there is no accumulation here and it just gets right down it and starts going beneath it, that's going to level itself out. The trend is going to flatten to neutral. The 50 period is going to continue to head down. That's where things get pretty bad. Now, also to note, being that this 450 level is so darn important, and we've seen that here, the more that this goes side to side here, the worst. The more that it accumulates from this area beneath 450, that's not a good sign. It'd be flagging right here, and it'd basically be potentially walking itself off a potential cliff here shortly. So that is what we got to watch for, right? What do I mean? Well, we saw this big pull in volume, boom, and then all of a sudden we start moving like this beneath 450 on declining volume. Like I said, it sets up for a bear flag. Okay, not saying that I'm predicting for that to happen, but like I said, RSI overextended, big move in volume to the downside. That could signal capitulation. All right, it could signal capitulation, but it could also signal something bigger to happen. So not the time to get aggressive. Okay, I think I call that out many times. Another thing that I want to point out. So VIX, if you look at VIX futures, they are in backwardation. Okay, so more volatility to potentially come here. Now, another thing to call out is right here we had a pretty high, but the S&P 500, well, I mean, just take a look. S&P 500 during that time, I was right around here. We're lower. We're lower right now. Okay, so that big spike in volatility, let me go back. Right here, it only brought the S&P 500 down, to around that 450 range. Now, volatility is right here. You have the PPO heading up on that daily time frame. RSI is getting to a little bit overextended. This can very well go higher. All right. It's like I said, it just doesn't, this right here, this level, it doesn't say like I'm super scared. There's not a lot of fear, not a lot of panic right here. Despite all these big tech stocks being completely clobbered, at this point, the market doesn't seem to be in full fear mode. Now, if you take a look at the VIX on the 30-minute time frame, we talked about this trending line potentially being an inverse head and shoulders, back tested, started heading higher. We haven't hit that target, but I will call out, little negative divergence, a high, a lower high, a high, a lower high right there. So, potentially that makes us come down a little bit, right? We still have two gaps. This basically was filled. I just kept it there. But we have this gap beneath us. But also to note, we have this gap above us still. That would be the target on this inverse head and shoulders. You don't need to pay much attention to that. But then we have one level at 45. So if you really want to feel a little bit more comfortable trying to tag a bottom, start looking at VIX 45. If that gap gets filled, I think that could be a good area to start hedging long positions. And I think that would signal that there is a lot more fear, like a capitulation type fear move in the markets. Not to say that would mark a bottom and then we're going to go to all-time highs, but it could signal for a potential nice bounce if we get there. Nasdaq 100. Okay. This one was down 7.45% on the week. Clearly cut right through that 200-day moving average. Okay. Like we've been talking about, potential all distribution. Okay, you have 1 week outside. If this is a lot of distribution taking place right here, and you have institutions and hedge funds getting out, and we see just a 7% break from that, are they going to want to start buying right now? Like what? Maybe, but why would they take the time to get out of positions and re-alter and change the tone of their investment strategy or whatever the case is, just to hop right back into tech stocks a week later, a couple of weeks later? It really doesn't make sense. Okay, and that's why I'm saying, once again, you just got to be careful. We've another big break, right? And it's been a big break on big volume. The RSI is under 50, right? The last time we actually crossed from above the RSI 50 down was here into the pandemic. Does that signal, does that tell us anything? Not much. It doesn't, but it does say that, hey, momentum is heading downward still. Qs, what's the range of volatility telling us? First off, huge spike in volume, could be potential capitulation. We have the RSI getting overextended to the downside. It's already been a big, strong move. Just like we're stating with financials, how it made a strong move and energy made a very strong move, those moves can get retracements. Just like a very strong move like this got a retracement. Strong move like this can get a retracement. So this strong move was on an inclining volume. The bounce came, a declining volume, and then the sell-off came on more inclining volume. Okay, options market is pricing in a move just around this 365 for next week and to a low of around 340. That would be that lower range. What could we potentially watch for? Lately, the very first day of the week, and what to also note, dude, like it's crazy. Just like last week was less trading days, right? We had a holiday weekend and it was this volatile. Absolutely nuts. Okay. All right. So where was I? Lost my train of thought. What can we look for? Okay, very similar to what I said about the S&P 500. If we start coming into this range, I would be looking for potential shorts because this right here, if low volume comes up here, I'd start looking for short positions to play into the momentum and just have a tight risk to reward if it got like above that 370. If we start closing above there for the week, or if we get some big red to green candle, that might change the tone of things, but we'll have to see that day by day throughout the week to see what's going on. But I like to just give these ranges to give you an idea of where the trade and what the volatility seems to be like. And as you can see, cutting right through that 200-day moving average, heading straight down, RSI is getting overextended. What we need to watch for, once again, is a low volume bounce to potentially short into. Okay, low volume bounce. Let's move on to the Russell 2000. Small caps also signaling a very, very dangerous environment. They're darn near. I'm pretty sure this isn't actually down 20% yet. I could be wrong. It's very close to it though. 8% down on the week. Now, last week we talked about this on-balance volume, and we noted that it was coming right outside of that trend. And that was on this week right here, and we said, is it signaling a potential break further? Answer, yes, it did. And it gave us that heads up notice. Not necessarily, like I said, a holy grail. Just something that I did notice. And the reason why I noticed it was because this break right here, that breakout of this channel, we didn't get confirming on balance volume move over that. That right there was a signal that this could be a fake out. It was breaking down before this was, signaling that we could very well see a breakdown. We're below all the key moving averages. They're starting to curve down. We're seeing increased volume. Like I stated, this does look like more of a crash scenario in the small caps. Where it could potentially go, like dramatic, filling this gap down here at 160 to 170, previous area of resistance. I've heard that small cap growth stocks, they gave back all of their performance during the pandemic run-up. Relative, I think, to the SPY. I think it was. Don't quote me on that, but I'm pretty sure that was the case. That small cap growth gave back all of their performance from a relative basis. Now, if we look at the daily time frame, I was looking last week at this gap to fill. We basically landed right there. Right, it was a wild week, up and down and up and down and everywhere. Okay, so we came in, filled that gap. What is the option market pricing in? Pricing in to move to around 205 to a low of around 190. RSI also, they're getting burnt to a crisp right here on some big volume. Like I said, look for those low volume bounces, but just be cautious. Like I said, volatility is still here. Volatility goes both ways, and what you'll expect, as we've seen throughout the day, is hey, nice recovery. Like I think that was on Thursday, a nice recovery, and then it just poof sold off the screen. Okay, Dow Jones down 4.6% on the week. These aren't small moves. Crossed below that 40-week moving average. Closed beneath there. We haven't closed beneath there, crossed beneath there since, right here. That was basically coming out of that pandemic low too. Okay, so as we stay below these levels, the moving averages, they start to flatten out. Does seem like a period of distribution. We need more time to see if potentially we can get some sort of recovery. But these big breaks on these candles with big volume signal that there's a change. Little change of tone in these markets taking place here in 2022. Take a look at the daily time frame. What is the options market price in? Move to around up to the upper edge around 350 to the lower edge of around 334. Okay, so like I said, if we start to see a bounce up, I'm starting to look for low volume bounces to potentially short into. If we come down to this low range, if we gap down and we just open here, first off, a gap that dramatic on any of the charts, be very careful buying a bounce. By all means, be very careful because it could get a lot more wild. But like I said, if you wanted to look for intraday bounces after large extensions, it does make sense too. Let's hop into crypto. So crypto, I actually just recently took a small position that it might get stopped out. I posted it out on my Discord, but I liked it from Ethereum perspective. I'll get into that chart here momentarily. But crypto's crashing completely, right? So the signal told us to get out basically here at the top. It's been a really good indicator. It's still working pretty well. We had a positive divergence. We don't have that positive divergence anymore, and we're still pointing straight down as it stands right now. This is the Sailor to Shift rotation strategy, rotation tool, and still we got to be patient here, right? Be patient. Signal's still off. If we take a look at the daily time frame for Bitcoin, a couple levels that I'm keeping an eye on for. So we did cross to this area right here. We tagged here, and that was previous area, like just a bunch of chop. There's just a bunch of chop zone, okay? So I marked out a couple levels. 30,000, we've seen some bounce and some strong moves from there. Strong moves, strong moves. So 30,000 would be a level that I'd be keen in for a potential bounce again. However, we did come into this prior area of chop, and we're starting to see a little bit of momentum here. It's very likely we can also see a bounce here, okay? We've seen bounces come from these extended moves to the downside. You got to be careful because of the current context of all this environment. But where can we potentially bounce to? Well, you can see this. This is potentially a head and shoulder pattern. We broke the neckline. So a retest of this zone, it would make sense. Boom, boom. Okay, so look for a potential retest to around 40,000 on the upside. If we start swinging up higher, you just need to be aware that they're also proposed that area would be an area of resistance. Ethereum. So Ethereum on the daily time frame, we hit a low, That low ended up being right next to this resistance. Where could we potentially bounce to? Around 2,800. That's this prior area of resistance. If we start getting above that, around 3,000, which was that prior area of resistance. Okay, so we can definitely do that. All right, so be very careful. Like I said, I took a position here on the extended move to the downside on the 15-minute time frame. What I did was basically I saw the momentum kind of slowing from the downside. So you can see it's been putting in, lower lows, lower highs, but the PMO was putting in higher lows. That's one thing. And then the RSI too. This is the 15-minute time frame. I'm just explaining one of my trades that I just recently entered into today on Saturday. But what I noticed was it put in a low and a higher low. It started building there, and we saw a nice little strong move out of that. Okay, and what I noticed was 224.50 started acting as a little bit of level of resistance and previous support. So I figured on the break, I would get above it. I would try to take just nibble small position. We got the break, and you can see it quickly reverted there. My goal is to play it into around this area. 2,700 to slightly lower to see if it does get some sort of a rally. But if it gets below that 2,300, I'm out of the position for a small loss there. Like I said, it's a nibbled position. Commodities, let's get into that. Gold. Gold looks good. So on balance volume is breaking to all highs. Gold has been going very, very just tightly coiling up, right? Expansion leads to contraction. I'm still waiting for that potential breakout on this weekly time frame. RSI is above 50. Typically during times of seasonality or based on seasonality earlier in the year, gold is typically pretty good. And you can see there has been a flight from a relative strength perspective from gold to the SPY. Broke out of this tightening wedge, positive divergence, RSI is getting a little bit over there, but you can see very strong move out of that wedge pattern so far to start the year. So it does seem like a nice rotation. If this relative strength continues to just move up here, I would imagine there could be very, very well could be more positioning taking place into gold as a safer play here amidst all this volatility. If you take a look at silver, on balance, volume looks pretty good. Chart of silver, it doesn't look great. You can see it's below these key moving averages. It tagged into the 40-week. This is the weekly time frame, which is basically the 200-day moving average. But support has still been holding up at 22. If $22 gives way, careful. Okay, but if this does hold and we start getting above this previous swing high, that opens the door to come back to around 28. And that would be obviously a lot more positive. Now, one thing that I didn't bring up as far as a chart goes on silver is if spot silver, okay, so silver, it has been moving hand in hand with miners. So for example, if you pull up a GDX chart and like make it a line chart and then you overlay silver, they literally move hand in hand together. So if you're trying to get some leverage, potentially look at miners, okay? That could be GDX, that could be GDXJ, that could be SIL, that could be SILJ, etc. Let's take a look at oil. Oil, monster run up, right? We sold off the previous day by almost like nothing, but it was aggressive to the downside, but then was caught right back up. So sometimes tops can be processes. You can see the histogram kind of slowly dying off here. We're in this red zone right here, the bears camp, okay? Are the bulls going to take over control and we're going to head higher? Possible, but this thing hasn't breathed yet. So what you want to see this just like financials, right? Financials, strong move up and it came right back down. So here you'd want to see a retracement or, a potential like consolidation or anything like that before just kind of blindly hopping in to some of these energy stocks, not knowing that, these strong moves, they will go through a period of consolidation and or a pullback. Let's hop into the dollar chart really quick. Dollar not giving us all too much insight so far. From a weekly perspective, we tagged our inverse head and shoulder target, and you can see here, we got a little bit of strength in the dollar, but the PO did cross over to bearish. I think that this could be a potential play here if the dollar, starts getting back above this 96, 97 level, where, like I said, where do people go for safety? I'm looking at the TLT. We'll look at the bonds and yields momentarily, but there's also a possibility that you might see people flood into UUP, which is just an ETF, a fund that you can play in for just moving into dollars. Let's take a look at the euro to dollar because this is basically the opposite. What I wanted to call out here, it's a little bit cleaner of a chart. So we had a head and shoulder pattern. We broke down, just tagged the target, and you can see here we are flagging a little bit. So if this does break down, that would signal probably that the dollar, right? It's basically the opposite. Dollar could head higher. Okay, but the bear flag obviously looked a little bit better than if I were to draw this as a flag, which it technically could be a flag there too as well. All right, let's look at bonds and yields. So yields, they pulled down a little bit, right? They're backing off a little bit. We don't know necessarily if that's going to benefit tech. We got to look at the rate at which they move. Overall, though, if you take a look at the spreads, the 10 and 2 remains flat. 35 remains flat there too as well. It's going to be very interesting to see how bond market responds to the FOMC meeting. Now, if you look at the 10-year yield via TNX, you can see it came off on the last day down 4.69%. You can see the PPO curling itself over, and all this puts weight to my thought process playing into TLT. Potentially, if you're familiar with how to use leveraged funds, you can potentially, I think it's TMF. I can't remember the exact ticker. I have to look. But we talked about this wedge and we broke it back out. Okay. What I like about this, a couple of things. I don't have the weekly time frame, but the weekly chart, bullish engulfing candle. On top of that, PPO is starting to curl itself back up. We've been in this trading range here. You got to wonder, where are people going to go to safety if, things continue to sell off? Very possible that we can move into a more liquid play, something like the TLT or even SHY, something like that, and this thing could fire off pretty quickly in that case. So, I'm thinking here that this could be a play into next week or potential start of a trend for move up if this uncertainty remains. And, you can catch a pretty nice move. I mean, it just recently broke out. My thought process going into Monday, I'd like to get it a little bit lower and then play it from there and then have a stop below this previous low here. And that's how I personally would play it. So that's what I'll keep an eye on. That's all I got for you, everybody, on the Stock Market Brief Show. If you haven't done so already, make sure to hit that thumbs up button. If you like this type of content, make sure to subscribe. I'll see you back here next week. Yeah, see you later.